What if I told you that the richest investor in human history just quietly moved billions out of the stock market and nobody is talking about why? Warren Buffett, the man who turned $10,000 into $100 billion, is sitting on the largest cash pile in Berkshire Hathaway's entire history. $334 billion. In cash. Not stocks. Not bonds. Cash. When the world's greatest investor stops investing, you need to ask yourself one question. What does he know that you don't? Stay with me for the next 20 minutes, because what I am about to show you could change. Person should be asking is why. Why is the greatest investor in history choosing cash over stocks right now? What does he see that most people are completely missing? To answer that question, we need to look at the real state of the global economy in 2026. And what we find is not pretty. The first and most serious problem is the United States national debt. America is now carrying over $36 trillion in national debt. To put that number in perspective, if you spent $1 million every single day since the birth of Jesus Christ, you still would not have spent $36 trillion. That is how large this number is. And it is growing faster than ever before. The United States is adding approximately $1 trillion to its debt every 100 days. That means by the time this year is over, the debt will be even larger and more unmanageable than it is today. Now, why does this matter to you personally? Because debt at this scale has consequences that hit every single person in the economy. Either the government raises taxes to try to pay it back, which takes money out of your pocket directly, or they print more money to cover the payments, which causes inflation, which silently steals the purchasing power of every dollar you have saved. There is no painless way out of a debt this large, and Buffett knows it. The second major problem is that the stock market is dangerously overvalued right now. Most people look at the stock market going up and think everything is fine. But Buffett looks deeper than that. He looks at what you are actually paying for the earnings a company produces. Right now, the price-to-earnings ratios across the American stock market are at levels that have only been seen a handful of times in all of history. And every single time these levels were reached, a major crash followed. Not sometimes. Every single time. Buffett uses his own measurement called the Buffett indicator. It compares the total value of all stocks in the market to the entire GDP of the country. When this number is above 100%, the market is considered overvalued. When it was at 140% in 2000, the dot-com crash happened. When it was at 100% in 2007, the 2008 crisis followed. Right now in 2026, the Buffett indicator is sitting at over 200%. We are in the most overvalued stock market in American history, and most people have no idea. The third major problem is the slow-motion collapse happening in commercial real estate. This one is particularly dangerous because it is happening quietly, out of the headlines, while most people are not paying attention. Office buildings across every major American city are sitting largely empty because of the permanent shift to remote work that happened after COVID. These buildings were bought and financed with enormous loans. The owners of these buildings are now struggling to make their loan payments because they have very few tenants paying rent. The banks that gave out these loans are sitting on massive losses. Many of these loans are coming due for renewal right now in 2026, and the banks simply cannot extend them on the same terms. This creates a cascade of defaults, write-offs, and losses that ripples through the entire banking system. This is almost identical to what happened with residential mortgages in 2007 and 2008. The asset class changes, but the mechanism of the crisis is exactly the same. And Buffett, who lived through multiple cycles of this, recognizes the pattern immediately. The fourth major problem is the stress building inside the American banking system itself. Most people believe their money is completely safe in the bank. And for most people, most of the time that is true. But the banking system right now is carrying hidden vulnerabilities that most depositors know nothing about. When interest rates were near zero a few years ago, banks bought enormous quantities of government bonds because those bonds paid better returns than keeping cash. Then, interest rates rose sharply and the value of those bonds fell dramatically. Banks are now sitting on trillions of dollars in unrealized losses, meaning the bonds on their books are worth far less than what the banks paid for them. As long as nobody asks for their money back all at once, this stays hidden. But if confidence breaks, if people start worrying and withdrawing their deposits, these hidden losses become very real very fast. We saw exactly this happen with Silicon Valley Bank in 2023. That bank went from seemingly healthy to completely collapsed in 48 hours. There are many more banks today in a similar or worse position. The fifth major problem is the fracturing of global trade and the rise of a new world order. For the past 80 years, the global economy has operated under a system where the United States dollar is the world's reserve currency, where American financial institutions set the rules, and where global trade flows relatively freely between nations. That system is now under serious pressure. Countries around the world are building alternative payment systems that bypass the US dollar. Major economies are forming new alliances and trade blocs that exclude the United States. The economic relationship between the world's two largest economies, America and China, has become deeply hostile, with tariffs, sanctions, and technology restrictions creating permanent barriers to trade. When the rules of the global financial system change, there are always winners and losers. The winners are the people and countries who saw the change coming and positioned themselves ahead of time. The losers are those who assumed tomorrow would look exactly like yesterday. Buffett sees all five of these problems clearly, and his response, holding $334 billion in cash, is not confusion or fear. It is preparation. It is patience. It is the setup for the greatest buying opportunity of his lifetime. He did exactly this before. In the months before the 2008 crisis, Berkshire Hathaway built up its cash reserves significantly. When the crash came and panicked investors were selling everything at any price, Buffett stepped in with billion-dollar investments in Goldman Sachs, General Electric, and Bank of America. He negotiated extraordinary terms because he had cash when nobody else did. He turned those investments into billions in profits. He is positioning himself to do this again. The only question is when the crash will come and how deep it will be. Now here is where this becomes personally important for you, because there are very specific things that ordinary people can do right now to protect themselves and even profit from what is coming. The most important thing you can do right now is build a meaningful cash reserve. I know this sounds boring. I know your financial advisor has probably told you that cash loses value to inflation and you should stay fully invested. But Buffett himself disagrees with that conventional wisdom completely. He believes that having liquidity when others are desperate is one of the most powerful financial positions a person can be in. Start today, even if it means temporarily stopping your stock purchases. Build up a cash cushion of 3 to 6 months of expenses minimum, and ideally more if you can manage it. The second thing you can do is take a hard look at what you currently own in the stock market. If you are heavily concentrated in high-priced technology stocks that trade at enormous valuations with very little actual earnings to support those prices, you are exposed to significant risk right now. This does not mean sell everything immediately, but it does mean think carefully about whether you want to be holding those positions when the market corrects. The third thing you can do is look at what Buffett is actually buying and think about whether similar investments make sense for your situation. He is buying Japanese trading companies with exposure to commodities and raw materials. He is buying companies with strong pricing power that can maintain their profitability during inflation. He is avoiding speculation and focusing on businesses with real tangible value. You can apply these same principles to your own portfolio regardless of how much money you have to invest. The fourth thing you can do is pay down high-interest debt aggressively right now. During a financial crisis, debt is the thing that destroys people financially. People lose jobs. Incomes fall. And if you have large debt payments going out every month, a period of reduced income can quickly become catastrophic. Buffett's companies carry very little debt by design. The same principle applies to personal finance. Every dollar of high-interest debt you eliminate right now is a dollar of vulnerability you are removing from your financial life. The fifth thing you can do is think about diversifying beyond your home country. The problems I have described are primarily American problems, though they have global implications. There are other economies around the world that are in much better fiscal shape, that have younger populations, that have growing middle classes, and that are less exposed to the specific vulnerabilities of the American financial system. Buffett himself is investing internationally. A globally diversified portfolio is simply more resilient than one that bets everything on a single country. The sixth thing you can do is invest in your own skills and earning ability. This is something Buffett talks about that most people overlook. He says the best investment you can make is in yourself. During a financial reset, the people who have valuable skills, multiple income streams, and the ability to adapt are far more resilient than those who depend on a single employer and a single paycheck. Think about what you can learn, what additional income streams you can build, and how you can make yourself more financially independent over the next few years. Now let us talk about the bigger picture, because understanding the historical context of what is happening right now is incredibly important. A financial reset is not a new concept. It has happened repeatedly throughout history. The Great Depression of the 1930s completely restructured the American and global financial system. The Bretton Woods Agreement after World War II created an entirely new global monetary order. The end of the gold standard in 1971 was a reset that most people alive at the time did not fully understand, but which permanently changed the value of every dollar in existence. The 2008 financial crisis was a partial reset that transferred enormous amounts of wealth from ordinary people to large financial institutions. In every single one of these resets, the pattern is the same. A period of excess builds up over years. Warning signs appear that most people ignore. Then a triggering event causes a rapid collapse of confidence. And then the system restructures itself, usually in ways that benefit those who were prepared and harm those who were not. What makes 2026 uniquely dangerous is that multiple major stress points are all reaching critical levels at the same time. The debt is at an all-time high. The stock market is at an all-time high valuation. The real estate stress is building. The banking vulnerabilities are present. The geopolitical tensions are escalating. And on top of all of this, artificial intelligence is beginning to displace workers across entire industries at a speed that the economy has never had to absorb before. When all of these forces converge, the result is not a normal recession. A normal recession is the economy contracting by 1 or 2% for a couple of quarters. What Buffett appears to be preparing for is something much more significant: a genuine restructuring of the financial system. A reset. But here is the most important thing I want you to take away from this video. A financial reset is not the end of the world. It is the end of one chapter and the beginning of another. Every single reset in history has eventually been followed by a period of recovery, rebuilding, and new prosperity. The people who suffered most in each reset were those who were caught completely unprepared. The people who prospered most in the years after each reset were those who had protected themselves, maintained their liquidity, and were ready to invest when prices were at their lowest. Buffett is not afraid of what is coming. He is excited about it in the quiet, disciplined way that only someone with his experience and perspective can be. He has seen this movie before. He knows how it ends for those who are prepared. The warning signs are all there. The world's greatest investor is already acting on them clearly and decisively. The only question left is whether you will act on them too. Do not wait for the crash to start preparing. By the time it is on every news channel and every person around you is panicking, it will be too late to prepare. The time to prepare is now, when things still feel relatively normal, when you still have options, when you still have time. Share this information with the people in your life who you care about. Because most people around you have no idea what is building in the global economy right now. Most people are going about their daily lives completely unaware that the financial ground beneath them is shifting. You now have the information. You have seen what the smartest investor in history is doing with his own money. You understand the warning signs. You understand what a financial reset means and how to position yourself. The 2026 financial reset has already begun. Warren Buffett knows it. And now so do you.